Hello, welcome to the European Open Briefing for Wednesday, May the 2nd. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be having a look at the latest developments in the currency markets today. The US dollar is trading close to yesterday's 4-month highs, ahead of that all-important FOMC decision later today. The trade concerns are somewhat back at the forefront this week. We've got a US delegation traveling to China to hold talks. We also have some more developments on the NAFTA front. The euro and the pound have managed to rebound back above key levels after yesterday's sharp slide. The same is true for the Australian and New Zealand dollars. The Aussie and the Kiwi were somewhat helped by positive data this morning. The Canadian dollar, on the other hand, was boosted by better than expected GDP numbers out of Canada yesterday, helping it rebound from 1 month's low. So let's take a closer look now at the US dollar. We can see those multi-month highs yesterday. Dollar index reaching 92.57, the near 4-month high. Dollar yen coming close to the 110 level. It's peaked at 109.91 at a near 3 months high. So we are seeing the dollar continuing to benefit from that shifting sentiment about the monetary divergence as slowdown in the Eurozone economy and in other economies is now once again underscoring the diverging monetary policy paths between the US and other advanced economies. So that's been boosting US Treasury yields, as we also have other factors such as the rising debt supply in the US and high oil prices also boosting inflation expectations. Yesterday we saw the release of the ISM manufacturing PMI for April, which came in below expectations, but still standing well above the 50 expansion level, and the price component also showed inflationary pressures building up. So overall, that didn't really hurt the dollar too much. Later today, of course, we have the FOMC decision. The Fed is expected to hold rates unchanged, but they will probably signal a rate hike at the next meeting in June. We also have some optimism that a NAFTA deal could be reached as early in the next couple of weeks, and we also have some positive remarks about resolution to the China trade dispute by U.S. officials. Risk sentiment is broadly positive on the back of those trade comments and some fairly upbeat economic data. But gold, though, is up this morning. That could be technical correction from yesterday's sharp losses. We can see yesterday gold prices fell to 4-month low of $1,301.51 an ounce. We also gold is also being helped higher by higher demand from China this morning. But gold has potentially could go even higher if those trade hopes are dashed later on this week. On Thursday and Friday, a U.S. trade delegation will be holding talks with their Chinese counterpart in China. We heard the U.S. trade representative saying that he's not concerned about changing the Chinese system, but simply wants China to open its markets to foreign companies, in particular regarding ownership of Chinese companies by foreigners. We also heard Commerce Secretary Wilbur Ross saying that he has some hope that the trade dispute can be resolved through talks, as well as optimism around NAFTA, with many people eyeing some sort of a deal being reached by the middle of May. Let's move on to European currencies now. We can see the euro and the pound, both of them turning higher against their US counterpart. This morning we saw the euro plunging to 4-month low yesterday of $1.1980. It's back above the key 1.20 level today, but we do have the Eurozone GDP, the preliminary estimate coming up shortly. That's expected to come in at 0.4%, a slowdown from the 0.6% in the prior quarter. If it falls below those forecasts, we could see a euro dollar moving back below the 1.20 level potentially. The pound, on the other hand, yesterday came under pressure from UK manufacturing PMI, which fell to 17-month low in April. So that's now pretty much killed off expectations of a rate hike by the Bank of England next week when it meets. We've got the construction PMI coming up shortly, as well as the service PMI that's due to follow tomorrow. Sterling yesterday fell to 4-month low 1.3578. It's managed to rebound to back above the 1.36 level at the moment. Moving on to the Australian and New Zealand dollars, we can see the Aussie continues to struggle. Yesterday it plunged to an 11-month low of 0.7470. At the moment it's back above the 0.75 level, helped somewhat by better than expected manufacturing PMI, the cash-in manufacturing PMI out of China. Yesterday we did see the RBA at its meeting. They kept rates unchanged, but they maintained their growth outlook. That wasn't able to support the Aussie yesterday as the dollar continued to trounce all other currencies, but it could be supporting the Aussie this morning. We've got the RBA's latest forecast due to be published on Friday. The Kiwi yesterday suffered from a drop in dairy prices, but this morning we had better than expected job numbers out of New Zealand for the first quarter. We saw the jobless rate falling to a 9-year low, although the wage component did disappoint. The Kiwi nevertheless managed to rebound to back above the 0.70 level after yesterday falling to 4-month low of 0.6988. And finally, let's look at the Canadian dollar. Although yesterday USD CAD did spike to a 1-month high or 1.2914. We can see though that resistance around the 1.29 level is still holding. So we saw the USD CAD easing back to around the 1.28 level. The loonie was supported by better than expected GDP numbers out of Canada. Yesterday we saw monthly GDP numbers showing a 0.4% month-on-month growth in February. Forecasts were for 0.3%. We also had a speech by Bank of Canada Governor Stephen Poloz, once again sounding more hawkish. He had been more dovish more recently, but now he's has shifted his tone again, and he's now raised expectations that the Bank of Canada could be raising rates potentially sometime in the summer. He said that as the negative forces fade, there will be the need for continued monetary stimulus, a diminished need for continued monetary stimulus, and rates would naturally move higher. Loonie currently trading at 1.2810 to the US dollar. Looking at today's economic calendar, we can see GDP numbers out of the Eurozone coming up shortly, ADP employment numbers as well out of the US. That comes ahead of Friday's NFP report, and of course the Fed meeting at 18 hours GMT. That's it from me. Thank you very much for watching, and have a great day.